Hello folks, welcome back to my channel. And yes, it's been an interesting couple of weeks, hasn't it? Just looking at these stocks going up and down like crazy, mostly down by thousands of points. It looks like today on Friday, what's the Friday the 13th? Well, that's an interesting day. I didn't know it was Friday the 13th, but okay, it's Friday the 13th. But yeah, it looks like stocks are recovering a little bit from the yesterday's sell-off, but I mean that's really nothing compared to how much it came down. I mean thousands and thousands of points. So anyhow, let me show you how my dividend portfolio did, which was not great. But so this is where we at. So let's just go back, and those are the latest numbers right there. As you can see, $280 down, and this all just happened in the past couple of weeks because of the coronavirus news and whatnot. So far, I've earned about $6.44 in dividends. So this number is gonna considerably going up from this point on because I keep investing more money every month. So as you can see, I've invested 1650, or it's actually, yeah, 1650 so far, and that's the difference in the market. So anyhow, that's obviously minus the 644 in dividends. But yeah, the dividends will go up because I keep buying more, and therefore I will be getting more over time. So if you look at it here, and I've only just started getting these dividends coming in. So you can see the first one was in February for 0.07. So I'm expecting Realty Income to give me some for the March as well, which hasn't happened yet, but we're only, March 13th. So we have another 2-3 weeks to go. Boeing gave me 21 cents, but I don't have them anymore. I sold them. Looking at Pfizer, Target, UPS, M, and Walgreens. So far, these are the guys for March that gave out the payouts. And so yeah, like I said, I'll be investing more in this, but hopefully now is the time to buy more since the stocks are cheaper. And if you look at the overall gains, I mean, the Walmart seemed to have lost the least. And if we go down, the REIT, the STOR Capital Corporation, they lost the most, only second by JPMorgan. I mean, I can say $28, but it doesn't really matter. It's like 52% here, 57%. That's the kind of the value that you're looking at. So these stocks are bargain these days if you're looking forward to buying some. Now I think is the time, unless I don't know, maybe it will go down even more. People are talking about this affecting recession, going into recession. I'm not really confident that's going to happen, but I guess you never know. All right, let's look at the spreadsheet real quick. Okay, so here's my spreadsheet here, and so these are all the stocks that I have so far. This is how much they pay per share. This is how much shares I owe, and this is about roughly what I'm supposed to be getting. So at this point, with $1,650 invested, should be getting about $14.50 return, with the goal that eventually I'll be earning $100, and that should put me roughly about $11,370 invested. And this is the nifty chart to show you exactly how much shares I have for each one, and then how much money I'm getting. So obviously I have STOR Capital Corporation 5.5 stocks, which gives me just short of $2, which is right here, $1.95. And then you can see that the second best although I don't hold the most of their stock, but the second best is Realty Income Corp by paying out. As you can see right here, $1.54. But if you look at it here, you would say, well, Kraft, Heinz, I have more of their stock, but they're not actually paying out as much as Realty. So that's also something to look forward, when you're pushing stock, where you want to invest. Well, looking at this chart, the STOR and the Realty Income, they're paying out the most for the stocks. All right, and here is how I'm doing so far this year. So the share price change, this chart just sucks because obviously it went all the way down, and it's going to be even more. This is only reflecting, for the February month, which was, I was at the 140 bucks, almost 138.97. And if you look at the portfolio this time, unless this substantially changes before the end of the month, this arrow is going to go even further down. So, yeah, nothing I can do about that until the sphere with the coronavirus stops. But at least you can see that so far for the March, I've earned $2.04 total, being $2.18 for the year so far. So that's gonna go up, obviously, and this is the chart representing that kind of a trend. So that's the chart. And now let's talk about the stock averaging, just to kind of let you guys in on it. There isn't really that much to talk about it. It's fairly simple. So let me get into that right now. All right, so this is one of the stocks that I've been buying through this dividend portfolio, and pretty much these are the values that I've been buying, since it's always the fractional rate. Depends how much money you put in. But then here's the share price at the time. So this is, when you look at the stock averaging, this is what we're looking for, is how much are you buying these stocks for? And over time, hopefully the stock will grow in value, which is where stock averaging works. If the stock goes backwards in value, then the stock averaging doesn't work that much unless that stock eventually goes back to its original price or more. So what I'm talking about is, if you look at it here, this is a spreadsheet, and the stock averaging is simply this. If you just add up all of them and divide by the amount of them, you get this average here, 78.60. That's all there is. So the point is of stock averaging is to buy as low as you can for it to hopefully grow up. That's no brainer, right? That's what most people try to do, is buy low, sell high. But in this case, the idea is to buy the dips. Therefore, your average keeps going down. So whenever the share price goes up, you have that average as a base number plus whatever money you made in whatever the stock is today. And like I said here, buying stock when it dips in price, not selling at the top of the price. So buy low, sell high. That's not the idea. This works only if you're going to hold the stock for a long time. It is a long-term strategy. It is not for short-term trading. So this doesn't really work if you're going to buy today, sell tomorrow kind of stuff. Works if price keeps going up or is steady, meaning let's say a company has a steady stock throughout the year, for example, $20 per stock, right? Well, we know when you buy their stock, when that particular company, let's say, pays dividend, that stock is going to go down a little bit. That's just how it is because of the expenditure. Well, whenever that happens, let's say stock will go down to let's say $19. So now when you buy it again, so the average between 19 and 20 will be 19.50. Well, more times you buy it below its standard price, your average goes lower, meaning you make more money on top end. Does not work when the price keeps falling, obviously, because the average works when you're going up, not down. And the most important, I think, of the all, which I already mentioned, is you want to buy this stock and play the long game for the companies that you believe in are going to be around for a long time, right? So you're not actually buying the stock at that time. You're really buying the part of the company, and you're committing to that company that you're going to be their shareholder for a long time, and you'll keep buying their stock whenever you can and whenever possible when the price dips for whatever reason, because market is cyclical. It goes up and down. So that's kind of how you're supposed to do it as well with this one. All right, well, hopefully that made sense. If you have any questions, do please put them down in the comment section. I'll try to get to it as soon as I can. Please do subscribe and like the video and click the notification button just to cover all three. It would really help me out, just so I know that someone does care about these videos. All right, guys, we'll talk to you soon then. Bye for now.